Hello, this is Alex Yao with Remax Select Properties.
And I'm Chris Cornborough, Senior Mortgage Consultant and Principal at Forefront Mortgages.
So we are going to talk a little bit about the Vancouver Real Estate over the past month, August 2020. In Greater Vancouver, for sales volume, we actually saw a huge increase, 36.6%. From August of 2019. However, it decreased 2.6% from last month, July 2020. Last month's sales, which is August, was 19.9% above the 10-year sales average for August. So active listings right now, we're looking at a 4.4% decrease compared to last August, but a 6% increase compared to last month, July 2020.
Wow.
For Vancouver East and West, single-family detached homes, you're looking at a 1% price increase on average for both sides. Townhouses, you're looking at 1.7% increase on the east side and a 2% increase on the west side. For condos, you're looking at 1.8% increase on the east side and 0.7% on the west side. And this is just for the month of August.
It's been busy, as you know for sure. I think with lower interest rates and people having a bit more time at home to hop onto MLS, we've seen mortgage volumes up, I think about 40% year over year, which is pretty amazing during COVID, especially as well. So first-time home buyers, the sweet spot in the mortgage market, if you're putting down less than 20%, you get a CMHC insured mortgage, you can get a rate below 1.8%. pretty easily for a 5-year fixed term, and variable rates are about the same. So overall, I think the low interest rate environment is helping a lot of our clients. It's certainly getting the headlines, and compared to a year ago, you know, when you were paying 3.5–4%, your cost of interest is cut almost in half. Is pretty amazing. So, a lot of people refinancing, renewing, looking at taking equity out. A lot of deals outside of Vancouver as well, Vancouver Island, Sunshine Coast, the Gulf Islands, the interior. It's definitely, it's busy, it's interesting. How long it's gonna last, I'm not too sure, but we're all along for the ride, that's for sure.
So I wanted to talk a little bit about kind of where things might be going. So we have a copy of the Snap Stats with us, which breaks down the sales volume, by price, by sub areas and so forth for each district. So I wanted actually to take Marpole and Cambie as an example, and I'll tell you why. So obviously we know that over the month of August, everything has been pretty hot in Vancouver. Everything's been selling. That's what we're hearing, right? Multiple offers here and there, everywhere. And prices have been just going up in bidding wars and so forth. However, I wanted to take these two places, Cambie and Marpole, as an example because of their listing volume. So if we're looking at Vancouver West Side, we're looking at Cambie. I wanted to talk about condos specifically, actually. So there's been 102 listings over the last month on Cambie, in the Cambie area, and 99 listings in the Marpole area. So combined, that's 201 listings out of 914 listings all over Vancouver West Side. Sales volume for Cambie was actually only 10%. So 10 out of 102 has sold in August. And Marpole is at 13%. 13 sold out of 99 homes. So these are buyer's markets. So why are people talking about, the whole place is, everything's selling so quickly and so forth? Everything's dependent on their kind of sub-location and their sub-markets. So if you're selling your home, you really need to have all the information that you can get instead of just being surprised after it goes on. Now Cambie and Marpole is significant because, as you probably know, over the last 3-4 years or so, there's been a lot of new developments down Cambie Street. They're still building right now, and a lot of those homes are coming to completion. So now the supply in that area has increased dramatically over the last few years, and now they're all complete. People are trying to sell them, investors are trying to sell them, or people that changed their minds or whatnot. So naturally, supply increased. With the increase in supply, obviously the prices are going to drop, or demand is going to drop, right? It's all relative. If the demand stays the same, supply goes up, then prices are going to drop. There's more to pick from. So if we look at other places, for example, Fairview, 100 listings as well, but 56 sold. That's 56% sales volume. And that's also Vancouver West Side. So in each area, your listing can perform very differently. So you have to have the right information with you. So what's going to happen later on? It's all dependent on supply. I keep preaching this. It's all supply. Everything that, well, most of the things that the government has been trying to do, has been to suppress demand. Whether it's mortgage stress test over the last while, the foreign buyers tax, this and that. Over the next year or so, we're probably going to be seeing a little more supply coming out, with people, unfortunately losing their jobs. It's a possibility. We don't have a crystal ball, but it's just a possibility with people losing their jobs or having their hours cut. And I think it's a reasonable, not really an assumption, but reasonable discussion to have to try to make sense of what the next year will bring. The next couple of months, though, it should still remain hot until maybe till the end of the year. And the winter months, I think, will be really telling on what next year will bring.
I agree. I think there's a few things that we have to contend with. Will be CERB running out potentially. I think that's happening September, October.
Right.
So people going on to more maybe of a longer term solution, whatever that's going to look like for the government, whether it's EI or people will start looking for jobs again, maybe get back into the workforce potentially. Rates will still be low. We have a U.S. election in November, which will be super interesting to see how that all pans out for our friends south of the border.
Right.
I don't know. Yeah, my crystal ball is very muddied right now. It's going to go one of two ways, and I don't know which way it's going to go. But we've certainly had a pretty good run in the last 4 or 5 months. More so than I would have thought with COVID.
Right.
That's for certain. So we'll see. Still, if you're working, if you got a job and you're stably employed, low interest rates are certainly going to help you. And maybe if prices do come off or there's more supply, that would be good for buyers. It's definitely a buyer's market opportunity for sure. We've seen a few folks purchasing or needing to complete on the pre-sale side of things. So like the Brentwood Mall development, there's a few developments along, as you were mentioning, like throughout East Vancouver, and in Dunbar as well, where people haven't really done their homework. They bought a place pre-sale, now it's completing. They're in a financial situation which they probably don't want to be in. So that could also bode well for buyers as well. If you've got some cash, maybe you could take advantage of an opportunity to get something that is probably more reasonably priced for your home. Yeah. We'll see.
So I think over the next little while, at least over the last couple of months, people have been listing knowing that the market's hot. Buyers have a slight fear of losing out. Kind of reminds me of 2016 to 2018 a little bit again. But I think the difference is that back then, I think a lot of buyers were jumping in blindly, if you will. Right now, they've just kind of had a bit of experience over the last year and a half of kind of market downturn and so forth. So now they're a little more careful.
Yeah.
They're looking at stats. They're looking at market values. They're looking at the potential and what could happen. And so everything's a little more reasonable, but the demand's still there.
Yeah.
Right.
Yeah.
So 2016 and 2018, we've seen listings are sold for as high as 120% of listing price. Now we're looking at even in multiple offers, 101, 102%
Wow.
in multiple offers. So it's a lot closer to listing prices.
Yeah.
And people are looking at listing prices now.
Are sellers being more reasonable? Are they taking a good offer? Either they're subjects, they're not being as greedy as maybe they were in the past?
Well, I think there are different sellers in any market, right? And right now there are those that's priced really high, and there are those that's priced reasonably. I think right now a lot of people are genuinely looking to move, genuinely looking for kind of a bigger space, whether it's a backyard for kids to play in, or home office.
Makes sense.
Yeah, or patios. Yeah. And these are the places that's selling really well.
Gotcha.
Unfortunately, the kind of the new developments over the last couple of years have been, just condos, right? And a lot of people buy those, 1-bedroom, 2-bedroom condos down Candy or Marpole.
Yeah.
And there's just so many of them that look almost exactly the same.
Yeah.
Right? And so supply is just overwhelming the demand in those segments.
I guess people working from home nowadays with COVID, or everyone's working remotely on Zoom or whatever have you. Outdoor space or amenities, or maybe being a little bit like outside of like downtown core, for example, just to get some kind of quiet time, is probably a big driver versus, back in the day, people wanted to be downtown in the action, near the restaurants, near wherever, but it's a little bit more quiet, certainly down there, so there's no draw to maybe that being around like people. You almost want the opposite of being outside of kind of like a compact center, but the ability to be close, but maybe not in it.
Yeah,
that makes sense.
So, I mean, my qualification interviews with my clients for when they're buying has changed in a way that, for example, back in a few years ago, they're looking for convenience. They're looking for, close to public transit, they're close to work, close to grocery stores and shopping or restaurants, whatnot. Now they want somewhere quiet, off the street.
Yeah.
Obviously, I focus a lot more on the listing side, the supply side, because I think that's super important to kind of forecast where the market's going to go. But from the buyer side, I would love to hear your perspective on kind of what would be a good time to get in due to financing, this and that over the crazy year of 2020.
Yeah, I mean, there's no magic answer to that, because I've found that the clients that have purchased property through COVID are in the technology space, in the healthcare space, perhaps the government, so they've really had no interruption with employment. We do have a lot of self-employed clients as well, so we're very curious to see if that group can continue on making moves up the property ladder. Obviously, a lot of businesses have been impacted. If you're a massage therapist or a chiropractor, or you in the service industry, you own a restaurant, for example, I mean, there's no doubt your income's been interrupted. So from that perspective, lenders are certainly more diligent looking at files. They're asking a lot more questions. They're wanting very, very current pay information. They want business bank statements to see that you've got money coming in, because, as self-employed people, you're usually just getting a tax return for like the last year. So really the income we would have used would have been from 2019. And now that's irrelevant for many people, right? There are a lot of folks that are making more money now. They're taking advantage of COVID with contract jobs, outsourcing, et cetera. So I would say overall, like the clients recently seem stronger, bigger down payments, good income, great credit, and they're looking at just taking advantage of low interest rates. They were probably priced out of the market maybe last year with kind of the frenzy, and then rates were 1% and a bit higher a year ago compared to today. So I think those that are buying, they seem very educated. They're not rushing into it and making an offer on a place that they haven't seen. We still have the subjects, which is good for us because it gives us a bit of time to do our job properly. I don't know. I'm very curious to see what the fall and the winter of this year and early next will entail. I'm hoping that obviously activity continues. Maybe we get back to normal. Maybe there's a vaccine for COVID. Who knows? There's so many what ifs in the next maybe 2 or 3 months, but we've certainly done better than I thought we would have done in the first part of 2020. So 2021, it's anybody's guess.
Right. Yeah. So with examples I just had, for example, Canby and Marpole, those new developments and all that supply, I wanted to kind of focus on those areas a little bit because I think that's where you're going to see the biggest change over the next year or so, with even more developments completing. And those condos, I mean, they're kind of in the realm of kind of a first-time home buyers market, right? Now, first-time home buyers, speaking of which, next year, obviously to qualify them for mortgage, you're going to be looking at, you know, their income history over the last couple of years, this and that. This year, if they're down in their personal finances because of obviously COVID, would that make it a lot harder for them to buy next year?
I don't think so. I think there were people that were laid off for 2 or 3 months during COVID. It seems to me a lot of people are back to work now, or getting back to work, which is good. So they're either working full time. I don't think too many people are going to buy a property. Obviously, without having a job, it's difficult to qualify. And if you had any uncertainty about your job, I kind of feel that uncertainty period is past. I think employers are you're either laid off or you're not nowadays. I don't think there's any kind of like guessing game with that. I think that people that are running companies and made decisions, we're going to proceed or we're not going to proceed with rehiring. Although I would say that your buyer in 2021 is probably going to be a stronger overall case versus somebody who's purchased this year, because I think in 2021 there'll be a lot more certainty with interest rates, with the economy, with COVID, maybe with pricing as well. If prices are going to come down a bit with supply, then I think those buyers that are going to jump on that opportunity maybe in the spring of 2021 will be better qualified than a buyer in 2020, if that makes sense.
Cool.
Yeah.
And listings these days, I think you really have to do your homework, like I said earlier, and every market's different, every sub-segment's different, whether it's price or sub-area, so you really have to go in very well informed and very well strategized. So thank you, Chris, for joining me.
Yeah, thanks for organizing.
We're going to be trying to do this once a month for you guys. And if you have any questions, please leave a comment. We'll read all of them. Or just call us, email us. I'll leave our contact information on the bottom here. And we'll see you soon. Have a good day.
Thanks.